Hello everyone. In this video, I wanted to talk about how to buy a share of a company. I get a lot of questions from people who are trying to invest for the first time, or some people might be following the news and hearing that their favorite company's stock is going down and they're interested in buying or in participating or in investing in that company, but they just don't know how it works, or they think that it requires a lot of money to get started. So with Questrade, your minimum investment to start is $1,000. So you can start trading with $1,000. So Questrade is a direct brokerage account. It allows you to buy stocks on the stock market or shares of a company on the stock market. It's not related to any banks. It's online. So all you have to do is open an account over here, and everything's online. You don't have to go in person anywhere. You don't have to get anything signed anywhere. You fill out the application online. You electronically sign it. They receive it. You fund your account as if you're paying a bill online, as if you're paying a credit card bill or a utility bill via your online banking. You're going to fund your Questrade trading account the same way. It takes about 2 business days for your money to arrive, sometimes even less. Lately, it's been taking me 1 business day. I'll fund my account on Monday, and on Tuesday, I'll see the money available in my account. And once your money's in your account, you can start trading, buying stocks of your favorite companies. Remember, when you open an account, use my referral code so we can each get up to $250. Obviously, it depends how much you're starting off with. If you start off with $1,000, we're each getting $25. So free money, why not? So the fees related to trading. So when you buy a stock, there's going to be a $5 trade with Questrade. And when you come and sell it, there's going to be another $5. So in total, buy and sell of a stock will cost you $10 if you're trading with $1,000. Because here with Questrade, as you can see here, it's 1 cent per share. So usually if you're trading with $1,000, you're going to be in the minimum range. So between $4.95 and $10. So some people, when they hear stock market, this is the image that they get. So obviously you don't have to worry about charts like that. This is mostly used by day traders. You don't need to know or understand how to read all this in order to trade on the stock market. If you're investing and trading long term, you don't need to worry about all these little specifics. So I want to show you how easy it is to place a trade. So once you've opened your account with Questrade and you funded your account with at least $1,000, and you see your $1,000 in your trading account, you're going to have here at the bottom right under balances, you can see your buying power. You can also see your buying power over here. When you first begin and you haven't bought anything yet, of course your buying power is going to be $1,000. So let's say you want to buy a stock of CIBC or Sun Life. Let's say you want to buy a stock of Sun Life. So you're going to look up the stock here, SLF, but obviously you want the one that's traded on the Toronto Stock Exchange, not the American one. This one here, NYSE, is New York Stock Exchange. So SLF.TO is the Canadian one. So here you can see what it's trading at. So if you have $1,000 and you want to use all that $1,000 towards buying shares of Sun Life, so you have that choice. You can put $500 in one stock. You could put $200. But in my opinion, $1,000 is a great minimum because of the fees, because of the $5 fees. If you only put $200 and you pay $10 in fees, then you're paying 5% in fees, which is a lot. But $10 on $1,000 is only 1% in fees. So I would recommend putting $1,000 per trade. So yeah, so if you want to buy some Sun Life, and let's say you see it trading at $52.91, but you'd be more comfortable at buying it at $50 or even $52, let's say. You'll wait for it to drop a little bit. If it goes through, then you want to buy it at $52. So what you could do is, first of all, you can take your $1,000, you're going to remove the $5 fee. You're left with $9.95. So you're going to take that $9.95 divided by the price that you want to buy the stock at. So let's say you want to buy it at 52. That gives you 19.13. So obviously you can't buy a fraction of shares. So that means you can only buy, with your $995, you could only buy 19 shares of Sun Life at 52. So if that's what you want, you're going to come here, click buy, sell. It's going to open an order entry here on the right side. Automatically, the quantity shows you 100. Obviously, we're not going to do that because we only have $995 to trade with. So we saw that we can only buy 19 shares. And then here you have your order type. So it's best to leave it at limit, because at limit, you're telling the system at what price you want to buy this stock. So we said we wanted to buy it at 52. Now, if you don't leave it at limit and you put it at market, you don't get to tell it at what price you want to buy it at. It's going to buy for you automatically at whatever it's trading at currently, which would be, in this case, for example, $52.91. And sometimes it can go up quickly, sometimes it it could go down quickly too. So I think it's safer to put limits when you buy. Use a limit order when you buy. Even if you want to buy at 52.91, put a limit order to buy at 52.91. So yeah, so in our case, in our example, we're going to buy at 52. So if the stock drops at 52, our order is going to get executed, and we're going to own 19 shares of Sun Life. If it doesn't get executed before the closing bell, which is at 4 p.m. Eastern time, then we will not have bought some Sun Life shares. We'll have to wait the next day and place a new order. So let's say we keep it at limit and we choose 52. So here you have the duration of the order. So you can leave it a day so that it cancels automatically at 4 p.m. and then you'll have to place a new order the next day. Or you can choose good till cancel so that the order stays active every day until you cancel it yourself or until the order gets executed, which means price finally drops to 52. And then here you just click which account it's coming out from. And then you just click buy, and then you click confirm. Now, I'm getting this message here because I don't have enough buying power. I only have 176 US, or in Canadian, it's 227 Canadian. So I can't buy 19 shares, but I could buy, if I wanted to buy some Sun Life shares. So 227 minus 5 divided by 52, let's say. So I could buy 4 shares of Sun Life, but I'm not gonna buy with only 227. I try to buy with at least $1,000. So that's all it takes to buy a share of a company on the stock market. It's that simple. Once your order gets executed, you do the exact same thing in order to sell the stock that you own. So instead of clicking buy, you're gonna click sell, and obviously your limit price is not gonna be 52. It's probably gonna be 60, depending on at what price you want to sell it at and how much profit you want to make. So let's say you bought it at 52, you'd want to sell it at 60. So 60 divided by 52, that gives you a 15% profit, a 15% return on your money. Plus, while you're waiting for the stock to go back up to 60 or to reach 60, you're probably collecting dividends. So you're making 15% return plus, depending on how long you hold it, I think Sun Life pays about 4% dividends per year. Here it says 3.47. So yeah, you don't need a large amount of money to start trading or investing on the stock market. I recommend starting with $1,000, and obviously not to be greedy and to be patient when you buy. Don't just buy at any time just because you like the company. Timing is important. You need to buy at the right price, and also be patient when you sell. If you buy a stock at a price and it continues to drop, don't panic and sell and take a loss. Wait until it goes back up. You might wait a little bit longer, but while you're waiting, you're collecting dividends, and eventually it's going to go back up and you're going to make your return. So you need to be patient when you buy and when you sell. As long as you're buying big name companies that you're confident are not going to disappear, you don't have to panic when the price drops below what you bought it at. It's normal. You're never going to buy it at the lowest point possible. You can only try to come as close as possible. So for example, here we used a Canadian stock. Let's say you wanted to buy a stock on the US stock exchange. For example, if you wanted to buy Apple, so you look up Apple, trading at 167. So remember, we started off with $1,000 Canadian. We want to buy Apple at 167. So first of all, you need to take into consideration that 1,000 is Canadian, so you need to convert it. So 1,000, first of all, we're gonna convert it. Let's say it's gonna be 132, for example. Remember, the brokerage accounts, they make money off the currency exchanges, but Questrade is the best in terms of the rate or the markup that they use. They only add 1.5% over the spot price. So if US versus Canadian is about 1.3, Questrade is going to charge you 1.3195. So let's say 1.32. Other banks would probably charge you 1.35, 36, or even 37. So that makes a difference on your profits, on your return. So 1,000 divided by 1.32, 757 minus our $5. So we have 752 US to trade with. We want to buy 100 Apple shares at 167. So 752 divided by 167, that gives us 4 shares, 4.5. Because we can't buy a fraction of shares, we can only buy 4 shares. So if we buy 4 shares, that means we will have invested only 668 US, which will be about 868 Canadian. So because we can't buy a fraction of shares, we won't be using our full $1,000 in this case, because obviously the stock is expensive. But it doesn't stop you from buying Apple shares. But obviously, because the stock is high, you'll have to wait until it reaches, let's say, 210 maybe, for you to sell it and make a good profit. At 210, you'd be making a 25% return. Personally, in my portfolios, my trades, I aim to make 7% per trade. At 7%, I start considering selling. Some people make 25% or even 50%. I guess in terms of selling, I'm not patient. I think have more of the mentality of any profit is better than no profit, because it has happened to me before where I buy a stock at 10, it goes up to 11, so that's 10%, but I'm greedy. I want to wait a bit longer, see how far it will go, and then it just drops to 9 or 8. So then I regret I should have sold at 11. I make my 10% return. If it continues to go up, I still made 10. But if it goes down, I could buy back again, and then I could benefit from this stock more than once. So personally, I aim to make at least 7% return per trade, and then I just repeat the process, because that 7% I'll make it in like between 1 and 3 months, and then I just repeat the process. So at the end of the year, I could end up between 10 and 20% return on my whole portfolio. So that's just the way I trade. It doesn't mean that it's the right way. It doesn't mean that I recommend anyone to do it or push anyone to do it, but I'm just sharing what I do and what works for me. You can make your own decision based on your research, on what you see. And you can watch my other videos on my channel. I show my past trades. I show all my trades for the past 12 months. And I also have other tutorial videos for Questrade and Investor's Edge. So yeah, I hope this video was helpful for those who want to start trading, who are beginners and think that you need a lot of money to start investing in companies that you like. And at the same time, I show you how to place a trade using Questrade. So if you're going to open an account with Questrade, don't forget to use my referral code. You'll find it at the bottom of the video. If you have any questions, don't hesitate to leave them in the comments below. I try to answer the questions in less than 12 hours. So thank you for watching.